There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Welcome back to the Trading Justice Podcast. My name is Matt Justice. I'm your host of the podcast. Tonight we got a special edition of episode number 50 of the Trading Justice Podcast. We're going to join live in session one of my trainings, teaching people a little bit about the currency market. So sit back and enjoy the podcast. The U.S. dollar, let me give it a brief history lesson here. How long have we had a reserve system? We've had a reserve system literally since the ancient Greeks. Whether you're talking about the Greeks, the Romans, the Byzantines, when you're talking about who else, the Florentino, when you're talking about the Spanish dollar, or you're talking the Netherlands, or you're talking the British pound, or today the U.S. dollar. We have had a reserve system for virtually our entire history. We will always have a reserve system, because the only thing a reserve system means is that every other people in the world, other countries in the world, other banks in the world, they hold our currency, whatever the currency that is, the reserve currency, they hold that currency in reserve. That can't last forever. That has to change, because being a reserve currency isn't all it's made up to be. When you're a reserve currency, you have to go into massive amounts of debt, especially here in the modern era of the reserve currency, which will probably, call from the British pound, the U.S. dollar on, when the banks started using the reserve status as a debt issuance. Prior to the British and the British pound, it was really kind of just using it in reserve. Now we use it as a debt service as well. But in terms of the U.S. dollar, the U.S. dollar was created in 1913. From 1913 until 1944, it was just a currency that was used here in the U.S. However, in 1944, during the Bretton Woods Act, you had an agreement, and what that agreement was made is that the U.S. dollar would now become the reserve currency. It would be tied to the value of gold. Can anybody tell me how much money was it tied to the value of gold? Does anybody remember that? Because gold's like $1,200 an ounce now, but what was it? What was it forever? What could you exchange an ounce of gold for? About $30. Okay, about $30. So that's what became known as the gold standard. From 1944 until 1971, the gold standard was the predominant reserve system we used in the world. In 1971, Richard Nixon and his Secretary of State, Henry Kissinger, moved away from the dollar as the reserve system, and not the reserve system, but the gold standard, and they replaced it with what was called the petrodollar, or the black gold standard that we'll talk about here in a little bit. The black gold standard, or the petrodollar, lasted until 1999. It is still ongoing today. It was the beginning of the end in 1999. That is a date and time that you should understand very, very well. Today we no longer have the petrodollar as a standard, although there are some still about 40% of the world oil market is financed in U.S. dollars, but I will talk about that later on today. Right now, the U.S. dollar has absolutely no commodity backing. So what does that mean for the value of the U.S. dollar? What is the true value of the U.S. dollar, since it literally has zero commodity backing? What do you guys think? What is the true value of the U.S. dollar? It's zero. That's all it is. It's a debt issuance. The true value of money is zero. Okay, it only goes for what it is used and accepted in terms of trade in that local marketplace. And yet, what amazes me is that people they put this enormous value on their money. And they put it in checking and savings, and they protect it, and they just think there's this huge value to it. But it's an amazing thing, because the consumers who are doing this, they sit there and they see the value of their money, and they're like, oh my goodness, we have this much money or that much money, or we have this much debt or that much debt. And what they're doing is they're not actually understanding the value of money. They're putting the value of their time on their money. because they have to go out there and they work really hard for that money. And so they associate the value of their time with the value of money. And that's not a good thing, guys. That's not the actual value, because the actual value of money is zero. In fact, there's literally only about 75 scenarios in the last 100 years alone where money, paper money, that had no value was literally just taken from the consumer base in the marketplace through either massive devaluations like the Russian ruble in 1991 or the Mexican peso in 1974, or through massive degrees of hyperinflation like in Zimbabwe in 2008, or Germany of 1922, 1923, or the Chinese in the early 1950s, or Brazil and Poland and Hungary and many other places in the 1990s. Okay, there's literally all these different scenarios, but we associate the value of money with something that it is not. The thing for successful people, for traders, for investors, for business people who understand what the true value of money and debt is, it is only a tool to them. And if you are not using money to leverage yourself to create more money, you're making a mistake. And if you're not using debt to leverage your debt and create more money, you are making a mistake, because there's no value to it. And regardless of what you've done to create this, whatever you have in checking and savings, it literally can be stripped away from you without even a moment's notice. It was a second in history that the Russian ruble, literally a second, that devalued by 99%. 99%. It was literally a second in history that the Mexican peso devalued by 60%, because because it's the entities that control the value of money or the supply of money that will it takes zeros off the dollar or add zeros to the dollar, and that's what happens in time. So I challenge you, if you are a consumer that thinks that there's value to money and you've worked so hard for this, look at what the true value is. Your time absolutely is valuable. The hard work you put in is absolutely valuable. But it's not the money that's the value. It's you that's the value. And you have to invest in yourself, educate yourself, so that you can learn to leverage your money to create more, to use your knowledge to diversify your money, to get into other currencies that actually have value. For example, does gold have value? Does silver have value? Does oil have value? Does even things like Bitcoin, does that have value? What do you guys think? Yes. And so you have to learn how to use your money to create other money. And so right now, and that's what this entire discussion is about, and that's why I'm going to spend the hour talking about what's going on in the reserve status, because what you guys do not realize right now, but what you should, is that your money is literally being destroyed. It's the value of your money is being destroyed over time. And if you don't understand these principles right now, not 5 years from now, right now, you're not going to have anything. You're not going to have anything in checking. It might say $100,000, but it doesn't buy anything. It might say $1 million, but we print $1 million bill. It does. You have to learn how to diversify and get outside that consumer mindset, because that consumer mindset that drives you to save is what is also going to drive you to lose everything you have. When you look at the value of the U.S. dollar from 1999 until right now, the U.S. dollar has declined against every other major currency out there, even though it is historically strong right now against the Australian dollar by 50%, the euro by 38%, the pound by 19%, the yen by 28%, the franc by 51%, and the Canadian dollar by 35%. There's some major reasons why the U.S. dollar is losing its reserve status. There's some major reasons why the dollar started to decline dramatically in value in 1999, and we're going to take a look at at really just three of them. The first one is the U.S. dollar and its reserve status. That is by far the biggest, baddest, number one topic that we need to discuss. The second one is the petrodollar, and the third one is quantitative easing. I'm not going to get into QE that much. I just want to basically reference what QE is and how it impacts the value of money. What quantitative easing is it's the Federal Central Bank's bond buying program. Now, who controls the supply of money? Is it the government, the central bank, or somebody else? It's the Fed, and the Fed is the central bank. Now, the central bank is a private organization, you could think of it as a private banking cartel. It is a private organization. It is not owned by the U.S. government. It is not controlled by the U.S. government. There is no oversight by the U.S. government on the Fed. The Fed is a private entity that was created in 1913 along with the U.S. dollar. The central bank's role in monetary policy is basically one of two things historically. Either one, they will raise interest rates, or two, they will lower interest rates. Now that goes to the supply of money in the market. If the Fed sees inflation getting out of control, it's because there's too much supply of money in that marketplace. So what the Fed will do is they will raise interest rate to start sucking out the money out of the market, because less market participants will borrow money at a higher interest rate than at a lower interest rate. And if the Fed needs to encourage economic activity, they will lower interest rates. And typically that's going to be during recessionary times in those types of scenarios. Now, that's kind of based on an economics policy called Keynesian economics, and I'll save that discussion for a later day. So that's historically what they are known for, is to raise interest rates or to lower interest rates, and that's how they control the supply of money. They also sell government bonds, and now from 2008 on, not before 2008, they now buy government bonds as well in the form of quantitative easing. What quantitative easing is it's the Fed's bond buying program, where the Fed will print money to buy bonds, of which they sell to themselves, all in an effort to drive interest rates lower so that people will borrow more money to put into the market. And I'm not going to get into all of the gory details of quantitative easing, because it has a lot more to do with the U.S. Equities markets and options market than it does the forex market. But I do want to just make sure everybody is aware of what this policy is. When you drive money into the market, okay, and the supply of money goes up in the market. When supply goes up in anything, what typically will happen to the value of that long term? When the supply goes up, the value goes down. And when supply goes down, values goes up. And so this is kind of happening not here just in the U.S. It's also happening in Japan. It's happening in China. It's happening in Europe. And so you're not seeing a direct correlation between quantitative easing right now and the value of the dollar, because everybody else is doing it too. It's like the most insane individual is going to win the race. And so we're seeing this across the global spectrum here, across many currencies out there. And so it's not having the net impact, but a lot of it's leading to a massive change in the overall currency system as a whole. If you want to learn more about quantitative easing, obviously there's a lot of stuff on the website, on the web, but outside of the web, we talk a lot about it in our stock and options course, because that has a much higher degree of correlation in the equities market than it does in the currency market. I just wanted you to be aware of what this policy is, because it's having a disastrous impact, not simply on the U.S. dollar. It's having disastrous impact on the overall, forex reserve system as a complete whole. Now, the second thing that is really kind of driving the value of the dollar from 1999 on is that. All right, now let's talk about the petrodollar. If you missed something, it was regarding quantitative easing. Like I said, quantitative easing, it's not having the biggest impact to the overall marketplace in the value of the dollar, because everybody in the world is doing it, not just the U.S. And so it's having more of a disastrous impact from the global marketplace than it is from a singular currency. So I just wanted people to be aware of what quantitative easing is. Regarding the petrodollar, though, and I'll move my mic a little closer so you guys can hear a little better, possibly. Regarding the petrodollar is literally the number one reason why the dollar started going up from the 70s, 80s, and 90s. It's the number one reason why the market, in terms of the currency market and the U.S. dollar, started devaluing in 1999. And it's very interesting to see right now, living in 2014, to see this marketplace changing, because it's changing really, really quickly. Even in Saudi Arabia, it's changing really, really quickly, who is our number one ally in the region. Well, what the petrodollar is in 1971, Nixon and Kissinger, they removed the gold standard from the U.S. dollar. Now, I'm not going to say much about Nixon, but I will say this about Kissinger. Kissinger is widely regarded as one of the greatest Secretary of States in U.S. history, which means I'm just going to assume, which means he's a pretty smart dude. Now, in terms of people like Kissinger, when they remove something as historically significant as a commodity like gold to the value of dollars, do they do that without a backup plan? Do they do that without plan B or plan C? What do you guys think? No. Okay. They don't do that. There's always a plan B. And what the plan B was the petrodollar. So in 1971, when you remove yourselves from the gold standard, Kissinger goes to the Sauds, and he says to the Sauds, he says, you know what, guys? We got something you need. And the Sauds say, well, what's that? And Kissinger says, well, we got weapons. And if there's one thing the U.S. does really, really well, it's produce weapons. I mean, we're the number one producer by far of weapons in the world. And he said, we'll give you weapons. And Saudi Arabia says, what's the catch? I mean, yeah, that's fantastic. You'll give us weapons. Good. What's the catch? And Kissinger says, the only thing you have to do is you have to price the sale of oil in U.S. dollars. And so Saudi Arabia in 1973 makes an agreement with the U.S., and from 1973 on, they've been our number one ally in the region. I mean, Saudi Arabia can do whatever they want. We won't do anything about it. If Iraq, blinks an eye at us, we're going to drop some bombs. That's how close that relationship is between Saudi Arabia and the U.S. is because, and it's all about oil, and it's pricing the sale of oil in U.S. dollars. And Saudi Arabia is also the number one supplier of oil in the world. And so they make this agreement in 1973. In 1975, the rest of OPEC makes the agreement. And from 1975 until really into the 1990s, we supplied almost every military in the Middle East with the weapons that we would then fight. From the U.S. perspective, we would then fight in the course of the 1990s, the 2000s, and truly even into now. And so now when this happened, what other countries had to do, think about this for a second. If Juan Carlos, where are you from? Guatemala. Okay, if Guatemala wanted to purchase oil, if Peru wanted to purchase oil, if Russia or China or Mexico or Canada or the UK or anywhere in the Eurozone, anywhere in the world, if you wanted to purchase oil, and by the way, what percentage of the world imports oil from the Middle East? Everybody. That would be everybody, guys. And so in terms of buying oil from the Middle East, what every country in the world had to do is they had to first sell their currency, buy the U.S. dollar. And so they'd go to the currency market or the bond market, and they would sell their currency, buy the U.S. dollar, and purchase oil. And so for 40 years, for about 30 years, we basically devalued every currency in the world because they had to purchase oil. They bought our currency, so all of a sudden the value of the U.S. dollar from the 70s, 80s, and 90s, it explodes in value. The value of other currencies, they go down. Because if one currency goes up, another currency has to go down. That's how currencies are traded. Well, if you're sitting in China or Russia, and Russia is a enemy of the U.S. for the majority of that time, and still even into today to some respects. And if you're China and you're an economic, competitor to the U.S., are you liking that? Are you liking the fact that you have to devalue your currency, which lowers your buying power? Are you happy that the U.S. can spend as much money as they want because their currency is strong? No. And so in 1999, you had two countries, China and Russia, and they go to, I believe it was first Iraq. And they say to Iraq in 1999, and who was leading Iraq? Saddam Hussein. And they said to Saddam, they said, you know what, Saddam? We want to buy your oil, but we don't want to do it in U.S. dollars. And in 1999, was Saddam Hussein an ally to the U.S.? Now, he was in the 80s. In the 70s and 80s, Saddam was a huge ally of the U.S., but not in 1999. We dropped a lot of bombs on Iraq in 1999, guys. And so Saddam says, yeah, we'll sell oil to you guys in rubles or yuan. Of course we will. Actually, the Chinese were in 1999 started using the euro because it started first becoming publicly traded in 1999. So the Chinese start using the euro to purchase oil. The Russians do it with the ruble, and all of a sudden you see the U.S. and what does the U.S. do? What was the U.S. response to that, by the way? What did we do? We dropped bombs. That's what we did. No, we didn't cut them off. We dropped more bombs. That was our foreign policy back there in the Middle East in the 1990s. Was if you're going to threaten our oil supply, if you're going to threaten the petrodollar, we're going to drop bombs on you. That's just what we're going to do. And if we do something really well in the U.S., it's we make bombs and we make the planes to drop the bombs. And so we would drop bombs. That's what we would do. Now, that has changed because we're now not forcing countries to continue to use the U.S. dollar because our foreign policy has changed, and I'll explain that here in just 1 second. But in 1999, 90% of the world was financed in U.S. dollar. 90% of the world oil market. Today, that is less than 40%. In fact, it is financed more in other currencies than it is in the U.S. dollar. And interesting enough, okay, up until about a couple months ago, it was just every other country in OPEC was making these different agreements. But even Saudi Arabia recently has started making agreements to sell oil in non-U.S. dollar transactions. And this is starting to really kind of impact. And if you look at the value of the dollar against all these other major currencies over the course of the last 14, 15 years, you're seeing a direct correlation to the percentage of the usage of the petrodollar and the value of the dollar. Does that make sense, everybody? And this is just going away, guys. And you're not only seeing that with the petrodollar, you're also seeing that with the reserve status as well. In fact, the last remaining hurdle with the value of the U.S. dollar, because we have printed trillions and trillions. There's hundreds of trillions of dollars in the system that are just out there being used in international trade. And the last remaining backing that the U.S. dollar has is that of the reserve status. You no longer have the gold standard. You no longer have the petrodollar standard. You're no longer forcing the world to sell their currency to buy yours so that they can, import oil and whatnot. But the one thing that we still have here in the U.S. as a primary issuer of U.S. dollars is that of the reserve status. And what the reserve status is in 1944, the U.S. and their economic allies at Bretton Woods, they made an agreement to use U.S. dollars in international trade. And the U.S. dollar at that point became the reserve currency. It has maintained its reserve currency, even though the Bretton Woods Agreement specifically is no longer out there because the gold standard is no longer out there. The U.S. dollar has maintained its reserve status over the course of since 1944. Now, let me ask you guys a question. I got two questions. Number one, if the U.S. dollar loses reserve status, what happens to the value of the U.S. dollar? Okay. Now, if you look at kind of the values associated, we're talking devaluation in the 60 to 80% range. Now, how many of you are willing to lose 60 to 80% of your money? Okay, and even if you're not from the U.S., as the U.S. dollar is a reserve status, it still impacts your currency as well. Now, how many of you believe that the U.S. dollar will lose reserve status over the course of the next 10 years? I not only believe it, guys, I do not see a scenario where the U.S. dollar is the reserve status after 2025. I do not see a scenario in 10 years where the U.S. dollar is still the reserve status. I'm always open to being wrong. I am. And I have been wrong many times in my life. Just ask my wife. But I do not see a scenario currently with what I'm seeing in the international markets, with what I'm seeing with the U.S. foreign policy, with what I'm seeing from the IMF, the United Nations, the World Bank, the BRIC countries, the Eurozone, everybody seemingly out there. I do not see a scenario where there is the U.S. dollar as the reserve status in the next 10 years, which means if you are simply using U.S. dollars, it is your number one risk. Your number one risk is not to the next bear market, although that is happening. Your number one risk is not to losing your job, because you can always get another job. Your number one risk is to the value of your money, because that value is going to change dramatically over the next 10 years. And I want to kind of explain how this works. Remember, the U.S. dollar was created as the reserve status through an international trade agreement called the Bretton Woods Act. Countries do not have to participate in that. It was just from 1950 until the 2000s who was the number one economy in the world. And yes, we still are the number one economy in the world, but it was the U.S. And we exported a ton of goods. We made a ton of goods. We exported a ton of goods. We were an industrialized economy. But in 2014, guys, is the U.S. economy an industrialized economy? No, we do not create goods here in the U.S. No, we import goods in the U.S. We import Chinese goods. We import Malaysian goods. We import South Korean goods. We import Vietnamese goods. That's what we do. We don't create goods. We buy other people's goods that are much cheaper than ours. China is the industrialized economy. We are a service economy. That's what the U.S. economy is now. It is a service economy versus a manufactured, industrialized economy. And so now what you're seeing the world kind of change. And in China in 2012, they go and they make these separate agreements with Japan, Australia, Russia, India, South Africa, Brazil. All of them made these separate international trade agreements to use non-U.S. dollar transactions in international trade. Now, when you see that list, Japan, Australia, Russia, India, South Africa, Brazil, when you see that list, you're like, hey, okay, some of those names make a lot of sense. China and Russia make a lot of sense. Well, what about Australia? Australia is not only an economic ally of the U.S., they're a political and a military ally. Japan is not only an economic ally, they are a military ally. But what you haven't seen on this list is you can also add Argentina, Peru to that list. You can also add the UK to that list. You can also add the Eurozone to that list. You can now also add Canada to that list. Why is it that in 2014, from 2012 to 2014, Japan, Australia, Canada, the UK, the Eurozone, some of our biggest political, military, economic allies to the U.S., why are they all making agreements with China to use non-U.S. dollar transactions in international trade? Why? Yes, because if they want to buy Chinese goods, China wants to now sell their goods in Chinese yuan. They don't want to sell their goods in US dollars any longer because nobody wants the US dollar. It's a trash currency. So stop holding it like it's of something of value when nobody in the world wants that trash currency. And so they're all making these separate agreements because China will trade with them. They don't trade with us as much as they trade with China. When you look at the OPEC countries, why is it that just this year, for the first time, Saudi Arabia makes an agreement with Russia and China to sell them oil in non-US dollars? Because China imports more oil from OPEC and from specifically Saudi Arabia than they do the U.S. The U.S. isn't the same economic power that it was 20 years ago, 30 years ago, 40 years ago. The world has changed, and the world is no longer an isolationist marketplace. It is not a sovereign marketplace. It is a global marketplace, and other players are starting to move forward. And it's not just these countries, guys. You also have massive organizations like the BRICS. You have massive organizations like the IMF and the United Nations, and the World Bank that is also moving away from the U.S. dollar as a reserve status. Ladies and gentlemen, 5 years ago, it might have been debatable whether or not the U.S. was going to lose reserve status. Not only is it no longer debatable, it's already happening. In 1999, you saw the beginning of the end of the petrodollar. In 2012, you saw the beginning of the end of the U.S. dollar. It's already started. The only question I have for any one of you is, what are you going to do about it? That's it. Because it's already happening. You can either duck your head in the sand, you can go hide in the corner, you can watch your money get absolutely stolen from you, or you can learn to sell it. You can learn to trade it. You can learn to get rid of it and profit off that, because if the US dollar does devalue, what happens to other currencies? If the US dollar does lose its reserve status, there's going to be another reserve status, ladies and gentlemen. And we here in the US, we don't have to have US dollars. There's nothing that says that. We can own other currencies and trade it as well. Learn to leverage it. Does that make sense, everybody? So the question becomes, what does replace the US dollar as the reserve currency? Okay, what is it? The euro? It can't be gold. Not enough gold. Can't be gold. Gold can play a role in it, but it can't be specifically gold unless everybody's willing to give up 90% of their money. Juan Carlos, there is zero chance in the history of mankind that it will be the Japanese yen. The yuan, Chinese, they're a player, Kent. Absolutely. Okay. What I kind of see out there is and guys, I've been studying this for about 5 years now. I certainly want to call myself an expert, because I want to call myself an expert on anything. But if there's one thing I know more than anything else, it's currency valuation. And when I look at the next reserve status, I'm looking at really kind of three major players out there. You have the Europeans, and a couple things before we get into this discussion of the next reserve currency is this. The world, they want to move away from one currency, a singular currency. Because when you have a singular currency that is the reserve currency of the world, the entire world economy is at the knees, so to speak, of that currency. Because if that nation's economy goes down and that currency is the world standard, what happens to the entire world, ladies and gentlemen? They all go into a recession. They all go into depressions. They all struggle. Exactly. And so what the world wants to do is they want to move away from a singular currency. So when you're looking at the euro already meets some of the qualifications that the world marketplace is really kind of wanting. The euro it was created in 1995. It was publicly started trading in 1999. It's got 17 nations currencies within the euro. And so it is already a diversified currency, so to speak, ladies and gentlemen. So it certainly does meet some of their parameters as such. I'll talk about the euro here in a second. The Chinese yuan, or what is known as the renminbi, is known as the people's currency. Okay, the people's currency. It's just referenced by the yuan, however. The Chinese yuan in 2009, nobody in the world would have said the Chinese would have had anything to do with the next reserve currency. In fact, the Chinese for 10 years, from 1999 until 2009, had backed the euro as the next reserve currency. In fact, the Chinese would buy as much euro as they possibly could every time it came into about $1.30 against the US dollar. That started changing, though, in 2009, and I'll explain kind of what the Chinese have been doing here in just one second. Is it the BRICS? Is it something to do with the Americans? Is it a new currency over in some capacity? Now, could it be a new currency? Absolutely. In fact, how hard is it to create a new currency, ladies and gentlemen? How hard was it to create the US dollar in 1913? How hard was it to create the euro in 1995? It's really easy. You say, here's your currency. That's what you do. It's that easy. The hard part about a new currency is not the actual creation of it. It's the international agreements that have to be made. It's all these 17 member nations in the euro coming together and saying, okay, we're willing to now adopt a new currency. That's the biggest problem, is getting these individuals to agree on a new currency. Once those agreements are done, the issuance is perfectly fine. Here's your new currency. And are consumers in those countries, are they going to complain? Yes, they will. And guess what? Nobody cares. Nobody cares. The governments don't care. The central banks don't care. Nobody cares. It's like, well, complain all you want. Either one, you convert your currency to the new currency, or you can starve. Do something. So even though consumers might yell and hooper and holler and hold some white pickets up and whatnot, it's not going to make a bit of difference in terms of the actual movement of that new currency. Let's talk about other currencies out there before we get into the actual currency discussion. How many of you have utilized something like Bitcoin? Now, a year ago, I literally never would talk about Bitcoin in my presentations. There's a reason that I am using Bitcoin now, ladies and gentlemen. There's a reason I talk about Bitcoin now. Bitcoin is a cryptocurrency. It was created in 2009, and no, that is not the currency that is associated with Bitcoin. Bitcoin is not an actual, tangible currency. Bitcoin is a cryptocurrency that is created through the internet. And so it is only utilized through the internet. It was created in 2009. Now, the reason Bitcoin and other cryptocurrencies were created in 2009 is because technology has advanced to such a level that it can. And yes, this is the Star Trek portion of my presentation. But outside of just that overall technological advances and whatnot, the mentality in 2009, think back to the subprime market crash and what kind of led to that subprime market crash. There was a lot of mistrust towards the banking system, the central bank, the Wall Street banks, and there still is today, and rightly so, absolutely 100% rightly so. What banks like, what the central bank did, what banks like Goldman Sachs and J.P. Morgan, Bank of America, the defunct Bear Stearns and Lehman Brothers and whatnot, what these banks did was criminal, except in our U.S. Judicial system, we do not categorize it as criminal, even though it absolutely was. And so there was a lot of mistrust towards the banking system. And so what a group came together in 2009, they created Bitcoin. And Bitcoin, they created it to get outside the traditional system of currency and of banks and whatnot. Transactions are made online. They're made through either online, or they're made through an app that you can download on your iPhone or on your Google Droid or whatever it is. All transactions are done peer to peer. There's no central bank. Transactions are completely anonymous. They're stored in a digital wallet. It uses military grade cryptography to secure transactions. Now, Bitcoin in the last year has absolutely exploded in popularity. Exploded. In fact, if you're from a major metropolitan city, I guarantee there's a Bitcoin ATM in your city. I guarantee it, where you can go and convert your currency to Bitcoin, and you can start using Bitcoin to buy things on the internet instead, or not even on the internet any longer. You can go buy a piece of pizza at a local pizza shop. You can buy a slice of pie with Bitcoin. So it's really exploding in popularity. I want to bring Tim on here for just a second, though. Tim, are you there?
Yep. How are you, Matt?
I'm doing fantastic, Tim. You've been studying Bitcoin for a long time now, and you were at the forefront of Bitcoin before I was, starting to understand kind of what Bitcoin was, what the pros, the cons of Bitcoin is, and I want you to talk to everybody about why you see in Bitcoin as something that currency that not only traders in terms of currency traders, but investors and consumers out there could maybe utilize Bitcoin.
Sure. There are a lot of things that go into it. I think that a lot of people focus on the headlines. You know, we read stories on Yahoo Finance and MSNBC and CNBC, and we hear stories about Bitcoin, and we think that's what it is. And I think a lot of people miss the picture of it. Number one is that digital currency is something that institutions have been looking at for a very long time. A way to store value, to protect value, to make transactions between people. You know, Apple, they're getting apps on their phone. They're going to have Apple Money and Google Coin and all these different things that other companies are already tying into, that Bitcoin's already leading it on. One thing that you got to think about is that digital currency is simply a way for you and I to make a transaction. We're cutting out the government, you know. In this complicated world that we live in, where, like you've been talking about for 45 minutes about the U.S. dollar and the role of that currency, what's happening around the globe and some of the concerns there, I think that consumers are going to continue to try to find ways to make their transactions, to store value, to have a currency outside of what we call fiat currencies. That's where these alt currencies come in, these digital currencies. And one simple thing, Matt, is that there are already talks, and this will happen at some point, where you're going to be able to create like a Bitcoin ETF for institutional investors. As soon as you can get the big money involved, it's going to take off. I mean, it already has a presence, and it already has legitimacy in my eyes and in many people's eyes. But as soon as you can get Wall Street and institutions and banks and involved in it, it's going to go crazy. It's going to go gangbusters.
No, I agree with that 100%. In fact, regarding that ETF, guys, an ETF is an exchange-traded fund of which you can trade in the equities market. And so you can go out there and you can actually buy like gold and silver in the equities market with ETFs like SLV and GLD. You can trade oil in the equities market with ETFs like USO and OIH and whatnot. And so when Tim's talking about this Bitcoin ETF, he's referencing an exchange-traded fund. And when you create this exchange-traded fund, what you have to do is you have to buy the commodity to back the fund. And so if an institution creates this Bitcoin ETF, they have to go out there and buy a tremendous amount of Bitcoin to back the ETF. And that discussion is ongoing. And Tim, I'd be very surprised if we don't have one or two ETFs that you can start tracking in the equities markets to actually trade and buy options on and whatnot by the end of 2015.
Well, and there's some other significant things to think about. I mean, everybody, knows what it's like to either own a house or somebody who owns a house. How many people here have, own your own home? Have a place of residence that you at least have a loan with the bank on, or that you own? Okay. Would you be willing to take the risk of home ownership if you couldn't put insurance on your house? I want you to think about that. Would you go out and buy a $400,000 or $500,000 home, or borrow $400,000 or $500,000 against the bank if you couldn't insure it? Well, some of that is the same decision that investors have to make with Bitcoin right now. See, getting involved with Bitcoin, there's not a lot of ability to insure the value of it. And one thing that is going to be created here, Matt, in the next couple of years are derivatives, which basically are forms of insurance against that value. And so institutions, just like anything, guys, as soon as they can insure and protect and leverage and hedge the risk of Bitcoin, they're going to be much more willing to get in there and participate.
Well, and Tim, you look at the investment opportunity in Bitcoin alone. Bitcoin right now is valued at about $380. That's U.S. dollars. It is priced in other currencies as well, like the euro or the yen. But it is priced about $380 U.S. dollars, which means to buy one Bitcoin costs about $380. I actually read and I'm not saying I agree with this. I'm just saying I actually read a article from an economist who was actually tracking the true value of Bitcoin, and he said if you look at the true value of Bitcoin because of the limited supply historically of Bitcoin and because of the increasing demand of Bitcoin, he called it at $1 million. $1 million. Now, I think that I don't agree with that, but I'm just saying there is if you look at Bitcoin from 2009 until now, you're talking about a currency that went from 0 to 380. And before the Mt. Gox situation, you were talking about a currency that went from 0 to 1,200. And if it breaks out of that 400 level, it's really basing between 350 and 400 right now. If it breaks out of that 400 level, Tim, I think there's a tremendous amount of upside from an investing and trading perspective on that as well.
Oh yeah, absolutely, and you can find ways to get involved with it. And the simple thing about it, Matt, I don't know what the true value of Bitcoin is. I just know that it's underpriced relative to what I believe is going to be coming down the pipeline. Yeah. That doesn't mean that it won't go up and down, because the history of new currencies, they have volatility. But as an investor, as a trader, you actually want to embrace volatility. I think that one mistake that I would offer counsel on to those out there listening right now, and don't fall into this trap, you don't have to know how everything works, okay, to start to use it or start to try to understand it. Too many people get worried about, well, how is it created, and what's the algorithm, and what is all this stuff about, and they're trying to figure out how it's mined, and they're trying to wrap their head around the highest level of complexity around Bitcoin, when really what they should just simply start to do is learn how to use it.
Yeah.
Take a simple first step to bring it into your life so you can start to understand it.
Tim, let's talk about the simplicity of something like Bitcoin, because right now, ladies and gentlemen, if I instead of saying the word Bitcoin, if I were to say the word U.S. dollar, it'd be like, yeah, let's just let's go buy stuff online with the U.S. dollar. It's really a similar thing. Let's go take our money out of our checking account and let's go buy something with the U.S. dollar. It's very similar to having a checking account. But Tim, I want you to talk about the simplicity of using Bitcoin.
Well, what you just said made me think of something I haven't thought about in a very, very long time. I graduated high school in 1998, and I remember specific conversations with people about, have you guys heard that you can buy stuff on the internet right now? How crazy is that? There's no way I'd put my credit card out there on the internet, right?
Nope.
I mean, I remember the fear and the skepticism just of that simple idea of making a transaction online. Fears will become they'll go in the past. At some point, people are going to overcome that. It will become part of the lexicon. They will start using it. The simplicity, Matt, is you pull your phone out and you scan it on a barcode, and that's it.
And guys, to kind of understand it, how many of you have ever gotten an airplane but you didn't have a paper ticket? You just pulled up your cell phone, you logged into your Delta app or your American Airlines app, and you just put it on the barcode, it scanned it, and it let you through. It's a similar technology to that. And instead of calling it a bank account, it's like a checking account, it's called a wallet or a purse. and it's there's some very popular ones out there, like Armory or Hive or whatever the case might be. But it's really just an app you download on your cell phone that you can store online. Now you got to learn how to protect it, in terms of keeping it off the internet and whatnot. There's things that you need to understand about Bitcoin. But Tim is absolutely right, guys. You do not have to know everything about the way something is created to be able to take advantage of it, because if that's the case, you'll never do anything. Literally, you never will do anything. Well, why were options created in 1973? I don't know. Let's just learn how to use them. Why? What is the algorithm for the Black-Scholes model? I'm not an engineer that won Nobel Prizes. I don't know. I just know how to use them. How is this worm created that creates Bitcoin? I don't know. The people that created Bitcoin were smarter than me. I just want to know how to use it. And from an investment perspective, Tim, your analogy is 1998, the fear of, purchasing things online. I mean, that was real back then. Not so much now. It's just commonly accepted now. But we're now just getting to the forefront, the very beginning of things like Bitcoin becoming accepted out there in the social conscience. And as it becomes more and more, and as you said, as institutions use it more and more, you're going to start to see the value of Bitcoin go up, which means you have an investing opportunity in a currency. And yes, Bitcoin is a currency. It's used to purchase goods and services. Using Bitcoin as a currency that could explode in value. And I say could because, there's risk in everything. Bitcoin goes up and down every day, just like everything else in the world goes up and down every single day. You got to do your research on it and whatnot. But at the same time, I see Bitcoin as a tremendous value. And the last thing I'll say about Bitcoin is this. One of the big reasons why people are starting to utilize Bitcoin is to transfer money. When you right now, what the majority of people, like for example, does anybody here live in the U.S. but send money to a foreign country? Does anybody do that here? Okay, Jack, you do. Jack, how do you currently do it? And sorry, from Canada to Europe. Okay, how do you guys currently transfer the money? You wire it through the bank, or you wire it through Western Union or something like that, right? And are there fees associated to that? More fees than you're willing to want to admit? Okay, good. And is it kind of a painful process? Is it kind of a time-taking process? Okay, well, what if you never had to do that? What if you could just log onto your cell phone and hit a button? Would that interest you? And what if you didn't have to pay fees? And what if you didn't have to be tracked? Because right now, every time you send money anywhere, you're tracked. Well, guys, that's what Bitcoin is. That's what Bitcoin is. Bitcoin was created to get off the grid. Bitcoin was created for the ease of use. And so, when now that I talk about Bitcoin, do you now understand why I'm talking about Bitcoin, guys? Now, it's not only the investment opportunity, it's also the ease of use. It's to make our lives a little easier. There's obviously risk out there with anything that we use. We got to learn how to protect it, just like we protect anything else out there. But Bitcoin should be a part of everybody's future. And if it isn't Bitcoin, it's going to be another cryptocurrency. It is here to stay. The one thing you can never stop is technological advances. So I'm going to make a challenge to everybody. This week, I want everybody just to try Bitcoin one time. Just one time. You don't have to put thousands and thousands of dollars into it, ladies and gentlemen. You don't have to do that. You can make a $1 transaction with Bitcoin. You can buy a piece of pizza with Bitcoin. It's trade fractionally. You can do it in 0.001% of Bitcoin. Okay, and so everything is done automatically. You don't even have to store Bitcoin in your wallet. You can make a transaction. It will automatically go from your checking account, convert it to Bitcoin to buy your product back to your currency. Okay, all of this. Just do a little bit of research, Joe. Okay, but go download an app called Hive. Okay, go to something like that. Go to an app called Hive. Or Armory is another one. Or go to Google and type in top 10 Bitcoin purses. Okay, it's Armory is just Armory. Hive is HIVE, I believe it is, and that's kind of a new age one is Hive and whatnot. But they're out there, guys. It's really not that hard. Just do it one time. Just try it. Just to get outside that box. Can everybody agree to that? Everybody good with that? Awesome. Love that. Oh, that makes me happy. All right, let's talk very quickly next reserve status. Now, nobody knows for 100% certain what the next reserve status is. We know what the plans are. We know what certain entities want in the marketplace. The one thing that is absolutely common amongst everybody out there in the world, every country, every organization, the United Nations, the IMF, everybody. In fact, I think the U.S. as well. All right, everybody. I include the U.S. there. Is they want to move away from the U.S. as the reserve currency. Now, why would the U.S. want to remove itself from the reserve currency? Why do you guys think? Guys, when you are a reserve currency, you have to go into massive amounts of debt. In fact, last year, we went into debt over $1 trillion last year. Our budget was only a deficit of $500 billion, though. The rest of that was the reserve currency. And when you go into too much debt, it's going to kill your economy. So if we remove ourselves from the reserve status, could we get a better handle on our long-term debt problem here in the U.S.? Yes, we could. We can get back to more of our capitalistic principles that we were created and founded on as being a classic liberal out there. All right, and so I even think the U.S. wants to remove itself from the standard as well, because the U.S. response to these international trade agreements is so vastly different today than it was even 10 years ago. 10 years ago, you would never have seen Canada make an agreement with China. You would have never seen Britain or the UK make an agreement to do a direct swap between pounds and yuan. You would never see the Eurozone do this. You would never see Australia do this. You would never see Japan do this. And so the U.S. response to it now is, okay, whatever. 10 years ago, we would have stopped those international trade agreements. I guarantee we would have. Today, we're not doing that. So the U.S. foreign policy response to these international trade agreements is telling me exactly what the U.S. is doing out there. Well, the plans out there that are really kind of happening is the euro. You have the BRIC countries through the Chinese, and then you have the Americans and what the Americans are doing in conjunction with the IMF as well. Now, in terms of the euro right now is the second largest reserve currency in the world. It is very large and very liquid. We already talked about the euro being part of the discussion in terms of already meeting some of the requirements that the world marketplace or the world governing bodies is wanting for a next reserve status, being the fact that it is a very, it's a diversified currency that doesn't just have one currency associated to it. However, the one problem with the euro is international conflict, internal conflict. At what point in history has France and Germany ever got along? At what point has France and Germany ever agreed on anything in any capacity? And they don't do it right now either. You have very differing opinions in the Eurozone right now with how they're going to handle their debt problem, with how to handle the issuance of bonds, and with how to handle quantitative easing and whatnot. Germany doesn't want any part of it because Germany has a different historical perspective than France does and other countries. And so you have this Germany-Netherlands type people in France and Italy, and so they just don't agree on anything right now from a monetary policy standpoint. And even the Chinese have stopped backing the Europeans from a monetary standpoint. So I do not see the euro becoming the next reserve currency. Is it the Chinese yuan? The Chinese yuan prior to 2009 really did not play a role in any capacity in the international markets. The Chinese would use the euro. They wouldn't use the US dollar so much, but they would use the euro. The Chinese, however, in 2009, they started changing their monetary policy and whatnot. In 2013, they did become a world top 10 world currency. In 2015, just next year, and think about this for a second, in 2009, 0% of Chinese trade was actually settled and conducted in the Chinese currency. And now in 2015, 30% of the number one exporter of goods in the world will be actually utilized in the Chinese currency. That is a historical move in terms of the Chinese currency. In 2020, it will be utilized widely in international trade. However, I do not see the Chinese replacing the dollar as the reserve currency because I don't think the Chinese want to do that. I don't think the Chinese want to change their political system, their legal frameworks, their constitutional law. Right now, the Chinese currency is basically priced from a political standpoint, not from a supply and demand perspective, and that's from 1971 on. When you remove the gold standard, you were basically what is called a free floating currency system, which meant all currencies were basically determined between supply and demand, and that's not the Chinese currency. And so the Chinese currency is politically determined right now, which the rest of the world will not get behind. And again, I don't think the Chinese want to be the next reserve currency. I just think the Chinese don't want the U.S. to be to continue being the reserve currency. I do see the Chinese playing a role through the BRICS, though. And I think a lot of what the Chinese is doing is in conjunction with the BRICS. Now, the BRICS is Brazil, Russia, India, China, and South Africa. South Africa was included in the BRICS in 2010. Now, the BRICS, just last year, they made an agreement. In 2011, they made an international trade agreement to use non-U.S. dollar transactions in international trade. In 2013, they made a separate agreement to not use the World Bank for international trading. They created their own banking system, their own central banking system, and they call it the New Development Bank. The New Development Bank, or the NDB, was created in 2013. It was actually funded in July of 2014. And the word is, and the analysis out there kind of leads, is that the BRICS will start utilizing a new currency that is a combination currency at the NDB to facilitate the international trade between the BRIC countries. And so we're starting to see this process come to fruition. The bank was already created, it's already funded, and it's already being conducting international trade between the BRIC countries. So they're basically removing themselves not only from the Bretton Woods Agreement, they're also removing themselves from the World Bank and in some capacities the IMF as well. The other possible avenue out there is the IMF. The IMF is basically, everybody know what the IMF is? Everybody understands what the IMF is, correct? It's the International Monetary Fund. Okay, they were created in 1944. The IMF has this thing called the SDR program. The SDR is known for special drawing rights. It is not a currency. The SDR is a bond. Think about it as a bond. The SDR can only be utilized by G7 countries and their banking system. So consumers in the world, they cannot utilize SDR. However, in 2009, the IMF started printing a currency, and you can see it on your screen right there. It says in the forefront, and it marks it 2009, unity in diversity. Okay, now think about that. Unity in diversity. Remember what the world marketplace wants to do. They want to remove themselves from the singular currency of the US dollar to a diversified currency that does not have the up and down nature of a singular currency. Does that make sense, everybody? Okay, so what happened, they started printing a currency in preparation. Now, just last year, the IMF came out and stated that even though the currency, the SDR program is a bond, It is something that can be converted into a currency over time. Now think about the euro for a second. In 1995, the euro was created, but it wasn't until 1999 that it was publicly traded. In 2009, the IMF came out and started utilizing the SDR as a form of currency through the issuance of debt and bonds between the G7 countries. In 2013, the IMF says, well, you know what, it's not a currency, but it could be converted into a currency to conduct international trade. The IMF SDR right now consists of the value of 4 currencies. That would be the US dollar, the British pound, the Japanese yen, and the euro. The Chinese yuan will be included in the SDR in 2015. It is only utilized by G7 currencies right now. By 2020, other currencies will be included in the SDR program, and by 2025, you will have more currencies, probably the top 8 or 9 currencies, 7, 8, or 9 currencies in the world will be utilized in the SDR as well. Now, to me, I see the SDR and the IMF as the bridge between the Americans, Europeans, and the BRICS. You have these 3 competing interests out there. Again, it's the Americans, the Europeans, and the BRICS, and they all have these self-interest competing groups. And I see the IMF as a bridge in this process to losing the one currency, the singular currency as the US dollar as the reserve, and moving to a new currency. Now, very quickly, when I reference the creation of a new currency, because I do believe a new currency will replace the US dollar as the next reserve currency, I am not suggesting that currency will be like the euro and we will utilize it here in the US, or China will use it in China, or Japan will use it in Japan. We will still use the US dollar here in the US. Canadians will still use the Canadian dollar. Europeans will still use the euro. The British will still use the pound. Everybody will still use their singular currency. It is this currency that will be utilized in international trade. So instead of 4 trillion US dollars being utilized in international trade, it will be this new SDR, or whatever they call it, that will be facilitated in international trade. And so let's say, like, for example, right now we can't buy the SDR. But if it comes in the future where you start seeing SDRs having a direct agreement with the Europeans in the euro, or the pound, or the Canadian dollar, what should we do, ladies and gentlemen? If we start seeing the SDR being directly swapped against other currencies, we should get in there. That's like buying the US dollar in 1971, guys. 1973. That's like selling the US dollar in 1999. That's like buying the dollar in 1944. That's like buying the pound the day the pound became the world reserve currency. Okay? It's that big a deal. But even if it's not, the SDR does not become publicly traded, I do believe it will in time. But even if it doesn't, remember the SDR has the value of not one, but the value of many currencies. And so now the US dollar right now is the singular reserve currency. All of a sudden, the SDR, it's only 13% value of the SDR. And so instead of 100% the reserve currency, it's now only 13%. So what happens to the value of the dollar? It will go down, because it has to go down, because demand will go down. What will happen to the value of the other currencies within the SDR, like the euro, like the Swiss franc? No, they will go up. They will go up in value. Remember, those currencies still will be traded. It is simply the dollar that will devalue. The other currencies associated to the SDR will go up. And so until we can do the SDR, once we start seeing this fluctuation happen and this change happen, can we still take advantage of it? But guys, think about it. How much opportunity do you have in the currency market, in a leveraged environment, to leverage your money to buy a new currency that the entire world is going to need? How much opportunity do you have there? Guys, generational. Generational. Do not nickel and dime this process. Okay? This is a generational opportunity, and I do not say that lightly. Kind of how I see this process playing out, ladies and gentlemen. Right here, currently in 2014, you have the U.S. dollar at 60% reserve status right now. The BRICS over here, they just developed their NDB. The euro right here, it is 26% reserve status as of 2014. I see the Europeans and the BRICS make an agreement with the IMF first to use SDRs in international trade and as an issuance of debt, and that's been going on for 2 centuries now. I then see the Americans also making similar agreements with the IMF to use the SDR through the issuance of debt and the transference of money. And then in 2015, I see the Chinese becoming a part of this. And by 2020, the IMF and the SDR will have a tremendous role in international trade with a role as a reserve currency. By 2025, I see it replacing the US dollar completely in 10 years. I do not see a scenario where this does not happen to the US dollar. Now, could I be wrong on the process? Absolutely, 100%. Could there be something out there we don't know about? Absolutely, 100%. I am not wrong on the US dollar. It will not have reserve status. The value of the dollar will devalue tremendously. You have an opportunity to sell your dollars, buy other currencies, and change your life. And that's something I see as pretty awesome.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.